This is a moment when shareholders, I think, have to wake up. So yes, I mean, I don't know how you could be sitting on this stock watching the volatility. We lost $155 million yesterday in Tesla stock and not say it's time to wake up and focus on what's expected of a CEO.
Those are some strong words from the New York City comptroller about this hugely public feud between Elon Musk and the president, which did send Tesla shares down 14% yesterday. They're rebounding about 5% today. But my next guest is less concerned about the politics here and more about the setup for the stock now. And he says yesterday's sell-off may have actually helped preempt a sell the news situation with the robo-taxi launch next week. Dan Levy is senior equity research analyst at Barclays. So it kind of de-risked the stock for you, Dan. Welcome.
Hi, Kelly. Thank you so much for having me. Yes, we were expecting a potential sell the news into the robo-taxi launch on June 12th. Really modest expectations, a far cry from where they will actually be over time. The move yesterday likely preempts some of that potential sell-off.
Yeah, I mean, is that because maybe we can show a year-to-date chart of Tesla, which has had so many of these periods of we're looking at it. It's run up really since April. So you think that it had become a little bit overextended with that latest move?
Certainly. What we saw really since the earnings date, so from late April up until the move yesterday, Tesla was up something like 45% versus S&P up 15%. But really what was interesting in that is this was a period of deteriorating fundamentals for Tesla, right? We've seen earnings estimates come down to the point where up until that move, Tesla was trading at 170 times 2025 earnings, which is effectively a nonsensical number and tells you that there's really little regard for the fundamentals. And this is really on the strength of the narrative of AV, on broader market strength, retail strength, et cetera. And we thought that maybe this was overdone on a near-term basis.
But Dan, what would happen if the president or whoever the head of NHTSA is now, or their superior, comes out and says, you know what, we're not so sure about camera technology. We're going to require LiDAR for robo-taxis. What would happen to the shares?
Yeah, there could be some potential volatility on the regulatory front. We've seen, by the way, in the past, Tesla has dealt with regulatory challenges on its FSD technology. But I do think that people are going to be gauging the strength of the technology and how it's progressing in terms of where Tesla is on this AV journey and, frankly, how it stacks versus Waymo.
Right. And for sure, if they can demonstrate that incidents like the crash, we all saw the video of this week with the sun glare, that wouldn't happen with their new technology, fine. But it's a president who's shown a vindictive streak in the past. And I'm just wondering now what kind of risk that would introduce into the stock. So maybe we could say down 10% now with today's rebound. Maybe a 10% discount is enough for that kind of political uncertainty. You could argue it should be bigger.
Look, I think that as it is, even after the move, the stock is still pricing in a lot of AV success. So that's the other piece, is maybe it preempted the sell-off. We are still slightly negatively biased because we do think that fundamentals, they don't matter until they matter, right? And what we've seen is negative growth. We've seen margins that have been under pressure. That may not matter for some people who will argue that the core auto sales business is maybe less critical now. But just a reminder, that is the engine that is funding the growth for AV, that is funding AI. And so that piece does matter. And fundamentals, in our view, it doesn't matter until it matters.
Right. So, Dan, I'd be remiss before you go not to ask you about what's going to happen with the rest of the automakers and this battle over the rare earth supply chain. How close are we to production shutdowns?
Look, I think we're trying to get our arms around this. It's something that definitely needs to be monitored. What I would just say on supply chain issues is we've seen this go both ways. We've seen issues that have been, close calls and end up being really not much of anything. But then obviously, I think there's still the collective memory from everyone of what happened during the semiconductor crisis, which really caused challenges for the better part of 2 years. This one's obviously a little different, but I think we're all sort of monitoring carefully.
How would you compare it on a scale of 1 to 10 to back then? Is this like a level 10 potential situation or more like a 1, a 2, a 3, a 4?
I think this one's a little different just because it's more of a policy call as opposed to actual supply constraints. But again, I think this gets to the broader sort of policy uncertainty, the tariff uncertainty, which has made investing in the auto space difficult.
Indeed, as you would know better than anyone. Dan, appreciate you joining us today.